Now, we're going to go on to our next speaker. This is Jannah Patchay. She's actually a very great thinker in this space, and so I can't wait to hear what she's got to say. It's sometimes occasionally controversial. Please be nice and welcome Jannah to the stage.
Okay, so hi everyone. My name is Jannah Patchay, and I wear a variety of hats. So I'm a consultant specializing in cross-border regulation and market structure. So market structure being the way in which various financial markets participants interact with each other. I'm also the regulatory advocacy ambassador for the London Blockchain Foundation. And finally, I have a side gig as a freelance journalist covering crypto assets for Best Execution magazine, which is a traditional financial markets publication. So I've been told to keep it short, and regulation isn't always the most engaging topic for many people. So I'm going to try and give you a flavour in somewhere between 5 and 10 minutes of some of the regulatory challenges around Libra. And contrary to what Eric says, I am actually going to try and withhold judgment and leave it to you to make up your own minds. So I think Linda has already alluded to the fact that Libra is not really a cryptocurrency in the true sense of the word. And from a regulator's perspective, so regulators typically don't really like new things. That's not to say they don't like innovation. They're generally quite, accepting of the fact that the world changes and there will be continual innovation in financial markets, but they don't like new things in that when they come across something that somebody says is new and amazing, the first thing they will do is look at the existing regulatory landscape and perimeter and try to pigeonhole it into what's there. And as we can see so far, in the emerging world of cryptocurrencies and crypto assets, this is exactly what's happened to date. So in the US, the SEC has applied the Howey test, which is a very old test to see if something's a security or not, to ICOs and STOs, regardless of what the issuers of the ICOs or STOs claim that the product is. In the UK, the Financial Conduct Authority at the beginning of this year published its consultation on crypto asset regulation, which is very much about seeing how security tokens, exchange tokens, and utility tokens fit within the existing regulatory perimeter. And that's how regulators will tend to approach Libra as well. They won't look at what Facebook or the Libra Association says it is. They will look at what it appears to be under the covers, and they'll say, okay, these things are going on and this is how we're going to regulate them. So in order to break down how a regulator might view Libra, I've tried to unpack the various activities that are going on here. So the first one is the minting of new Libra coins by the Libra Reserve at the demand of authorized resellers. So the Libra Association basically operates a, let's call it a fund or collective investment scheme, because that's what it actually looks like. It is a big bucket of Libra coins that are sort of fund structures based on an underlying collection of currencies and short-term notes. And when someone wants a new Libra coin, so an authorized reseller in this case, they will come along to the Libra Association or the Libra Reserve and say, I would like you to mint me some new coins. And the Libra Reserve will go out to the market, so they'll buy the underlying assets, and then they'll issue this new Libra coin to the buyer. The second is actively managing this sort of fund structure, because the Libra Association has already said that a key consideration for it is going to be ensuring an absence of volatility and a kind of stability in the value of Libra coins. So this means that the fund structure needs to be actively managed, because some of the currencies underpinning this will have volatility and fluctuations associated with them. So there's an activity there. Next up, there's the sale of Libra coins to end users in exchange for fiat or cryptocurrency. So that's what the authorized resellers do. So when you are a Libra end user you go along to an authorized reseller and you say, I'd like to buy some Libra coins from you, please. And the authorized reseller may have some Libra coins already, in which case they'll just sell them to you. Or they might have to go back to the Libra Reserve and say, can you mint me some new coins? Then there's the market making to end users. So again, this is similar to the previous activity. This is more the ongoing activity of as end users want to trade in and out of Libra, either for fiat or cryptocurrency, they will go back to these authorized resellers and they'll say, can you make me a price for this? And the authorized reseller will need to ensure that they either have sufficient reserves of the fiat or crypto, or they have more Libra to sell on. So the Libra Association has also said that their vision is that Libra coins will be available for trading on exchanges and trading venues. So this is another potentially regulated activity. And then there's the kind of core use case of Libra, which finally we're only getting to now after all these stages, which is the use of Libra as a means of payment. So end users actually want to use this as a means of payment themselves. And then finally there's the payment services provided by the Libra wallet system. So those are, at a very high level, the activities that a regulator in almost any jurisdiction will be looking at and trying to determine how Libra should be treated and regulated. So here's putting it all together. And there's a lot going on in this diagram. I kind of threw everything at it. So first of all, we have, as I described over here, the Libra Association or Libra Reserve in its capacity as a fund manager, which is itself in most jurisdictions a regulated activity. And they are interacting with banks and exchanges because they need to actually buy the underlying currency and short-term notes in order to mint new Libra. And also when they have people coming to them to redeem the Libra, they need to then sell them to access the underlying securities. Currency. So then over here we have an authorized reseller, which I put this in the context of European regulation because that's what I know best. But it's pretty easy in most of these cases to translate to US or APAC regulation as well. The point of this is just to show that every single one of these these activities is currently a regulated activity in the EU. It is not in any doubt that it is a regulated activity. And what I want to also demonstrate is the complexity of not only doing this in the EU, but doing it on a cross-border and global basis, which is what the Libra Association wants to do. So, you're mostly all still awake, which is good. Okay. So, the authorized reseller is going to buy newly created Libra coins. They might also go and redeem Libra coins. And the authorized reseller is basically acting as a market maker. So the Libra coins in this context are, let's say, units in a collective investment scheme would be the fancy regulatory term for it. They're financial instruments. So they're very clearly within the scope of what's defined as a financial instrument in the European Union. And this means that they're all regulated. So when you undertake activity in these, you have to be an authorized entity by a regulator. So all our authorized resellers will basically have to be investment firms, which are subject to the full MiFID regime. Some of you may have heard horror stories about it. And that's non-trivial. Not anyone can go off and become authorized as an investment firm. Closer, or I'm running out of time?
Yeah,
okay.
not closing.
Okay, right. So all of the authorized resellers will pretty much have to be authorized as investment firms if they're in the EU. So the authorized reseller is then selling Libra coins on to end users. What I want to point out here is that these end users are retail clients. So in the EU we have three categories of clients. There's eligible counterparties, which are like banks and financial institutions, and they have the lowest degree of regulatory protections attached to them. Then we have professional counterparties, which are kind of the next tier down. You get some large corporates, you get other types of financial company. At the very bottom, we have retail clients. And retail clients are generally subject to the highest degree of protection by European regulators and by regulators globally. So it is a non-trivial undertaking to engage in regulated activities, so buying and selling of a financial instrument, a Libra coin, with a retail client. Finally, you have your retail clients who, so your end users who now want to actively use Libra. So Libra is basically going to be a payment service provider in the EU. This is probably the least of the Libra Association's problems here, because it's actually the most relatively straightforward thing to be behind all of this. And then they're going to be buying, paying with Libra as various retailers on the other side. I'm not going to go into some of the valuation and liquidity issues, because I think that will be covered by other panelists soon. But I will go into just a few of the kind of side activities that can occur over here. So your retailer who's receiving payments in Libra may wish to hedge their risk. So they'll go to a trading venue where these are actively traded, and they'll attempt to hedge it with another instrument. The trading venues are actually regulated as well. And then, because there will be fluctuations between the value of Libra and the value of the underlying basket, you will always have these guys, the agency and the algos, who come along and try to kind of play the arbitrage markets here. And they're going to raise the same problems that they usually create when they're on trading venues, which is like trying to co-locate and snap up as much liquidity as possible, and that doesn't always result in a great result for the end user. So this is quite a complicated picture just from the European perspective. Now, regulators also consider two things when they're looking at cross-border activity, because we have to remember that Libra is global here. So they'll consider the location of the service provider. So for example, if you're established in the UK, you want to provide the service, or in Switzerland, as the Libra reserve will be, then you will have to be locally regulated in Switzerland. But they also consider the location of the clients to whom you're providing the service. And there are some cross-border provisions under which you can do this. But in general, as we already know from Brexit, being outside the EU means it's not actually easy to get market access. So it's, in general, there's an expectation that if you're providing substantial services to end users in a different jurisdiction, that you will have some regulated establishment in that jurisdiction. So I think the Libra Association's plan of having a monolithic establishment in Switzerland may be somewhat ambitious and potentially unrealistic, to put it mildly. So that's a quick overview, and here I've just basically described the kind of conduct regulation side of things. I haven't gotten into fin crime, so financial crime, counterterrorism financing, or AML. That's a whole separate area, or prudential requirements either. But I hope this has given you a bit of a flavour of some of the regulatory challenges around Libra.
Lovely effort you put into that for us. Much appreciated for the explanation. I'm going to remember the words over-ambitious. So it's part of it, so that was terrific.